Hello, fellow traders. 'Tis I, TheRumpledOne. It's Sunday, February the 10th, the year 2019. Let's talk trading, weekly open and gap. But before we get to it, money and risk management, you have to do it. I went through that many times last week. Okay, we've got 1, 2, 3 gaps, but this one was barely a gap, so that one doesn't even count. So you still have a couple opportunities, but you can see the rest of the gaps filled. I don't know how many of you try and take advantage of that, but it's a profitable trade. And you can see here, we've exited the weekly wick zone to the long side. So let's see how far that candle can go. We're still below the yearly open. We had 4 days in a row down. So that's, employ the buzzard reversal. 3 or more, look for a reversal. Buzzard reversal, that's way back in the systems. That reminds me, I heard something, I was watching another video, and this guy's giving advice about trading, and he said, it's a 50-50 chance price goes up, price goes down. That's incorrect. There are no probabilities in trading. There's only two. Actually, there's no probabilities. There's 3 options. Price doesn't change at all. Price goes up, price goes down. That's it. You can see here, we're putting in a new high for the first day of the week. Only a 20 pip range. We're still early in the day. We're still red for the month, but we're green for the week and day. And you can see where we are within the range of the first day of the month. We're just now 1 pip, like 1 pip above it. You can see here, last week, we went out of that inside bar. But last week, look at all these different inside bars we had. So it looks like there's plenty of opportunity if you like trading inside bars. Excuse me. See, one of the things he did say that I agree with is that you want to set up your trade before you actually click the button. You want to know in advance what levels to look at, where you want to enter. I mean, basically, you could put in pending orders, either buy stops or just buy limits and sell stops and sell limits. If you already know these levels, you could put them in ahead of time and just, check back from time to time to see if one of your trades trigger. That's perfectly okay. What you don't want to do is just get in here willy-nilly, and as we used to say, airball a trade. From one of traders, his handle was airball. Shout out to Ben. Once again, not much of a range, but obviously something's happened with the Swiss franc. We've got 4 franc pairs over 100 pips in range. Okay, we put in a weekly highest open, H1 open right there. There's the monthly lowest, the daily lowest open right here. Monthly H1 lowest open right here. So you can see there's opportunities for a holo trade. Buy zone, you can see the pivot is below the buy zone, so No real bias, but it has hit the pivot. Now, there was a trader was asking me about saying, if you're only taking 2 or 3 pips, but your stop loss is 10, you've got this really bad risk reward ratio. And what I tried to communicate was, you see, each trade is a trade unto itself. So let's just say we were to go long right here. And let's say price goes up about 3 pips and it stalls and the candle closes H1 and the new candle opens, fails to make a new high or makes a new high, but comes back through the previous high, which I pointed out many, many times. You just scratch the trade, take the 2 or 3 pips, and that's it. Because you've got the price action telling you to take the trade. I mean, here's a perfect example right here. If you had entered and you see price went up and then it came back down, this is where you should be out. I mean, because you see what happens next, and then it shot back up, right? And then it shot back down. See, you don't know. So, yeah, it'd be nice do you want to ride it? Because it's better to take those 2 or 3 pip profits, because the part that you're not understanding is that if you don't take those profits, you might get stopped out. So what would you rather have? 2 trades, minus 10 each, or 2 trades, +2, +3, +5? I mean, it's up to you. It's your portfolio, but I think you're not looking at the total picture here. This is debatable. Let me know what you think. Okay, there's no rat zone trades. We only got 20 pips, so the zones are on top of each other. Once again, we did take out the pivot. Here's our weekly pivot at 124.80. Let's see if we take out that pivot. Okay, we've got some missed pivots here. 125.51 here from a few days ago, 3 days ago. We got a missed pivot from 25 days ago and one from 26 days ago. Once again, price action. I mean, that's pretty much the name of the game. You see the 2 ball red at the line, you enter the trade. I mean, could price turn around and could have done that? Yeah, so, but, price didn't. It came down here. And what happened? You see it crossed that line, came back, price started to go. Might as well just exit the trade. Or you could have moved your stop loss up to maybe, or do a trailing stop. I don't know, maybe you said, okay, I'll put my stop loss here at, at +10. And so it came back, almost touched it. Hey, look what happened. You got more money. And here's another opportunity. But when did you exit? When did you exit? Or are you still in the trade? So you got to know these things ahead of time, what to do based on what you see. Wick zone, in and out, as I mentioned earlier. It happened on the weekly and also on the daily. No trades yet here. You haven't hit any of those lines. And you can see here, price has been moving up at the tick level. Einstein line. Once again, this is when I started the chart. Trigger in. Okay, still above this line, so it's still up relative to when I started. And right now, be up, a pip. So you see right here, what you would, if you took this trade, what you don't want to do is let this trade become a loser. You could say, yeah, it could wiggle in, and then you stop out. Or what you do is you take it, it comes back down, Then it goes up, you get another chance to get back in the trade. Or it comes down here, you get a chance to go short. We don't have a crystal ball, so, we really can't make any of those predictions. Let's see, what did I have on? What is this mess? Oh, it was something I found out there. Oh, that's interesting. It's not one of mine. I wonder if this thing's buying and selling. I better close this down. It might be buying and selling. Looking at the range here, once again, the week and day are the same on the first day, only 21 pips. Frequency distribution, once again, high minus open. How many pips can you take? You can see here, there's a good chance high minus open is going to be 10 or more. What, 90% of the time? Right here, open minus low is going to be 10 or more. What, 84% of the time? That's why I like the buy zone. Once again, the range on the H1, is it going to be bigger than 10? Yeah, about 67%, basically 2 out of 3. So knowing these statistics helps you gauge when to take profit or when to stay in. You've got statistics, you've got price action. Combine the two, can help you be profitable. But of course, this is for educational purposes, and your results may be different, right? So that's pretty much it. There's still a couple of those pairs on the week if you want to go for the gap fill. They might even happen, later today, maybe tomorrow. And I guess I'll continue with the trading like a pro since people like it. And so I'll put out some more tips this week. In the meantime, just remember it's not what you trade, it's how you trade it. So get out there and drain the banks this week.